Alexandra Leonhard with Elliott Wave TV, and I'm joined today by Jim Martens, the editor of Elliott Wave International's Currency Pro Service and Elliott Wave International's senior currency strategist. Jim, thanks for taking a couple of minutes out of your day to chat today.
It's a pleasure to be here again, Alex.
So in our last interview, we had talked about the euro-dollar exchange, and you had mentioned that the excitement in that market is yet to come. Can you elaborate a little bit on that and talk a bit about how your forecast has played out so far?
Well, so far it's played out pretty well. To begin with, we have to go back to what we talked about last time, and it was the corrective nature of the euro's recovery from March into August. Now, it looks like a three-wave affair, sizable, but still corrective. So the peak at 117 was at 117.14, and we were saying at that point that we expected a large decline to begin from there. Now, the euro is already down off that high. The decline looks impulsive at small degree, and that's what we've been tracking in the service. And we have what we think is another small corrective recovery. And as long as it ends under 117.14, assuming it's not already complete, we're looking for the euro to start another leg down very soon.
And China's recent decision to devalue their currency seemed to have sparked a wave of global market volatility. Do you expect these dramatic price swings to continue in the currency markets?
Well, in that pair specifically, the dollar versus the Chinese yuan, we saw a surge, of course, with dollar strength, with the devaluation. But what we've seen since then is a stabilization. But when we look at the chart closely, the dollar setback has been in three waves. So Elliott tells us that's a likely correction and that further gains lie ahead. But after a surge of the size and especially the emotional nature of the movement, I wouldn't be surprised if we saw this drawn out in a bit of a sideways affair for a couple months before the next leg up begins. But at this point, it certainly looks like the dollar will continue to rally versus the Chinese currency.
And are there any other currency pairs that you're watching closely? Any other potential trade setups that viewers should keep their eye on?
Well, I think we spoke last time about dollar CAD, and I'm still looking at that, and it's still trapped within the sideways range we spoke about previously. So I think that's a fourth wave correction, a triangle, going back to May of this year when the pair traded at 119.19, and we need another new high to complete a five-wave impulsive rally sequence. So the passage of time on this one doesn't bother me at all. We've been watching levels beneath the market that as long as they're not broken, that we will hold with the bullish view. They have not been broken, so the view holds. So we're kind of just sitting on our hands and watching. Now, just the last day or two, we introduced a second idea that if recent lows within the consolidation are broken, what will that mean? And we've come to the conclusion that it won't change the outlook for dollar CAD, that a new high in a fifth wave still lies ahead. It would just be a more complicated fourth wave correction. Quite interesting, but it's one of these situations where we can have multiple wave counts based on the rules and guidelines of the wave principle, but we still come out with the same expectation of future market action. In this case, that dollar CAD would move to a new high. So I find these interesting when we have a pattern and time passes, because most people get kind of bored with the situation. They get nervous about it. And I look at it a different way. I take comfort that the levels that should not be broken have not been broken, so we can just continue with the same view. The market's going to move at its own pace.
And looking ahead to Thursday's Fed announcement and their potential interest rate decision, what, if anything, do you expect the fallout to be in the currency markets?
Well, our overall view is for dollar strength, so we wouldn't be surprised at all if that's exactly what we saw in reaction. Now, the dollar wouldn't rally in response to the Fed's decision at all. We've seen dollar strength already over the last week or two versus the euro, and I already spoke about an impulsive decline in euro dollar. That's euro weakness, dollar strength. We're looking for, and I just mentioned dollar CAD to thrust higher out of a triangle. So we believe these trends are already entrenched in the marketplace, that the dollar should rally. It might cause some investors to think that this is the opportunity, and the press certainly is going to look at the decision as the as the catalyst for the dollar rally, but all it will be to us is a continuation of the trend that's already in place.
Thanks for chatting today, Jim, and offering these insights. I appreciate you taking a couple of minutes to share them with us.
It's my pleasure, Alex.
To learn more about Jim's forecast and analysis for the currency markets, please check out the link below. Thanks for watching Elliott Wave TV.